or straight back into Bitcoin. Bitcoin, I have multiple different charts on Bitcoin to show you today because there's multiple interesting scenarios to play out here on Bitcoin. You snooze, you lose. That's correct. That's the problem with being Australian. I don't know how many Australians I have in the chat right now, but like when everything happens in the US, it's like 2 a.m. or 2 a.m. to like 6 a.m. It's very, very late. And so being a crypto person in Australia is not exactly the easiest thing, but I work with it. But daily chart on Bitcoin, let's get into it. We have the descending wedge formation as usual, as I've probably said thousands of times in the last 2 weeks, right? Descending wedge formation, these yellow dotted lines. We've broken back into the wedge. Very interesting, right? Very interesting. And the volume on this move, however, has been quite low. Okay, we saw within the 3 green candles, we saw 1 day of kind of okay volume, 1 day of a massive spike, and that's because we had a wick to the downside. That was not positive volume. If you go to the hourly chart, you can see that's not green volume, and so it doesn't necessarily count. And that was low volume. I'd consider that low volume. And we had ascending volume here on the green candle, but then we also had ascending volume again on the red candle, and that's because of the meeting with the Federal Reserve. So I think that there's multiple things here manipulating the volume. I don't think the volume itself is inherently strong, and so I'd consider this a low volume week. And I think that when you see low volume in an upwards trend, like a 3-day upwards trend like we've had now, it's usually a bearish indicator. And so if you speak to any kind of crypto person on Twitter or kind of analyst, they'll tell you that if volume is decreasing, the current trend is unsustainable. So, for example, if you see decreasing volume in an uptrend, that means the uptrend is unsustainable. If you see decreasing volume in a downtrend, that means the downtrend is unsustainable. And we've seen on basically every uptrend on Bitcoin here, for example, from around December 20th through to around December 25th, which is Christmas, very, very low volume. Same thing happened here, January 11th through to January 14th, very low volume, and those moves ultimately end up getting rejected. Now, chat, I will read this chat in a second. I'm just going to finish analyzing Bitcoin. So I might take about 10 minutes here just to start off, finish Bitcoin, then I'll do some altcoins, then I'll come back, do some Ethereum, do some altcoins again, and then I'll finish up. Right, so I'll put the chat on pause for a second. You guys can keep putting your questions in. I'll read them all in about 10 minutes here. I'll just finish up Bitcoin because Bitcoin, as you guys would know, is basically the most important thing you can analyze. Bitcoin is the market mover. It's the leader of the market. Everyone knows this. Ethereum's the leader of the altcoins, so we're looking at Ethereum as well. But Bitcoin controls basically everything. And so when you're analyzing Bitcoin, you're essentially analyzing every altcoin at the same time. I wouldn't say it's descending volume factually, but I theorize that the volume's very low here. It's just been pumped up due to global events. So I think low volume, if we headed over to the hourly chart, and we'll come back to the daily chart in a second, we can see that we had a yellow resistance line here on the hourly chart. And it kind of almost resembles a wedge formation. We could even draw in a wedge formation. You'd probably get away with it, something like that. And we broke that to the downside, okay? And obviously ascending wedge formations are incredibly bearish charting patterns. We can see that, as we rose here, this volume was kind of low, it was decreasing on the rise. And then obviously as the Federal Reserve meeting kicked off, we saw that volume start to ascend again. So look, rejection from that yellow resistance line. We've come back down to the red support line, which I'll go back on the daily chart right now and show you what that is. That red support line is this uptrending red support that we've seen from around the December period through to around July play out, and we've kind of leveled out on that support right now. So look, going into this further, and we can look at even more indicators right now, we can see that, for example, things like the Ichimoku cloud are trending downwards heavily, and they've actually trended downwards below 40K. And so if we were to reach that, say, in mid to late February, that would be below 40K. And so we'd be coming up on a potential rejection zone. So it is kind of critical importance for the bulls that, if you are bullish on Bitcoin, it's of critical importance that we swing up to the upside sooner rather than later within the next couple of weeks. Because once we kind of consolidate in this region, in this 30K region, you could argue that, hey, we consolidated in this region in May to July, and look, we turned out fine. I don't think that's the same scenario right now as this Ichimoku cloud trends downwards towards the major resistance. We're not in the same scenario at all, actually. I mean, in May to July, one of the only reasons why Bitcoin actually rallied is because the vast majority of people would have thought that a 4-year cycle or lengthening cycles was taking place. Now that we've had the top in November, and I think that's very decisively the top, if you disagree with me, let me know why. There's no kind of hope at the end of the tunnel here. in May to July, everyone knew that, hey, this was not the bull market top because it's happened too quickly, right? We need more time. We need more of a bull market, and we did see more of a bull market. And now, since it's happening now, well, it's happened basically in alignment with the 4-year cycle theory, and people would believe that, hey, maybe the top is in, maybe we are entering some sort of bear market right now. And so that Ichimoku cloud trending downwards towards major resistance in that market environment is very bearish. Looking at the bull market support band, it's still trending at that between the 53K to 48K area. You'll notice that I have 48K as a thick blue line. That is because 48K is my critical breaker. I think that 48K is the most important price on this chart right now. If we break above 48K, and by the time we get there, we would have flipped the bull market support band, flipped the Ichimoku cloud, and also flipped the 50-day and 200-day SMA. And also, if we headed over to the weekly chart, we will also flip the 50-week SMA. So those are the things I'm looking at for the daily chart on Bitcoin. And let's just keep this rolling for a second. I'll get to the chat very shortly because I'm going to upload this Bitcoin segment to YouTube after, for those of you who weren't able to tune into the live stream. So I'll look at the chat in a second, don't worry. And we've got one more thing here on the daily chart. If we look at the volume profile, the VVPR, a lot of you would know my analogy I like to use in the volume profile. I like to think of these yellow spikes as hills, right? When you're at a crevice of a hill, or when you're at, the valley of a hill, or the valley between two hills, it's going to be significantly harder to run up both of those hills, and so you're at a bit of a point of contention. We've dropped below the valley. The valley was at 40K, the major support, and now we are kind of on top of a hill, which means that if we run downwards towards the major resistance, we're going to be running there very, very quickly, and we can retest 40K very quickly. But if we run downwards the other way, we can retest 30K very quickly. So it's a bit of an indecisive position that Bitcoin is in as a whole. What I will say is that if we lose this major support line, this red support line, properly, we didn't really lose it properly, we only closed one candle below it, we will be heading straight towards 30K. So let me just clarify there. If we close a daily candle below 36K, we're going to be heading straight towards 30K and retest that support block. And that's a 20% drop. It might not sound big, but these numbers are kind of deceiving. If we close below 36K, I'm saying we're going to have a 20% drop to 30K. That is a significant claim to make, right? That's not just a kind of like, it could happen, could not happen. 20% drop is a large drop. When you lower the numbers, obviously the percentages kind of change a little bit, and people would be used to when we're at 60K, a 10% is only 6K. All right, now, 10% is, 10% is 6K. Now it's only 3K. And looking at let's jump into the weekly chart here, first of all, and kind of looking at the weekly chart, and we'll actually jump into a different Bitcoin chart to try get a kind of better thing. Actually, yeah, before we talk about the weekly chart, let's talk about this Bitcoin chart. I've got a second Bitcoin chart here that I've been looking into in recent Bitcoin videos. You guys would know about it because I've brung it up for about maybe 3 or 4 days now. And this is my kind of second scenario in Bitcoin. Now, you would know that I saw on the Coinbase chart that I just looked at, I saw a descending wedge formation. Now, on this chart, this Bitstamp chart, I'm seeing a descending channel formation, and this is kind of like playing into, well, there's different interpretations of a chart that you could have. This is the second interpretation. And using this interpretation, you come to this kind of the same conclusion, but you can come to it more concisely. This descending channel formation has been playing out since mid-November. It's continued to play out for about 3.5 months, but almost 3 months here on Bitcoin, about 2.5 months. And if it were to continue, we would end up at the 200-week SMA, which is our major kind of support, so where I think Bitcoin's going to bottom. Here in this yellow scenario in which we don't have any bounces to the upside, right? If the channel just continues, we'll end up there at around the early March. Okay, so early March. However, if we do break out of the channel, okay, I would expect this orange scenario to play out. I would expect a bounce upwards, a rejection from 48K around the time of the next Federal Reserve meeting. When the Federal Reserve raises interest rates like they said they're going to do, we will see a crash in Bitcoin and across financial markets, as raising interest rates for the Federal Reserve will essentially put them at risk of recession. There'll be a lot of fear in the market there. That could be priced in beforehand, but we'll have to wait and see. But essentially, I'm hoping the yellow scenario plays out. I'm hoping we just go downwards because I want to get this over with as quickly as possible, and I think a lot of people do. I'm not trading in this current market. I'm not trading in a sharp downwards trend. There's simply no point. What I am doing is keeping an eye on the market and looking for a great entry, and I think that great entry is going to come at the 200-week SMA. Looking at my third Bitcoin chart here, we can see this longer term macro scale. Actually, let's look at this macro chart later in the video, what I will do is I'll bring up the weekly chart on Bitcoin, and then we'll finish up the Bitcoin analysis, and we'll start heading into some altcoins by your chat recommendations or some questions there. Let's get a fresh Bitcoin chart. I don't think I've used a Gemini chart in a long time. All right, sweet. So we can look at the weekly chart, and a couple of things are quite striking for the weekly chart. Namely, let's bring up the Gaussian channel. Gaussian channel is a bit of an interesting thing we've got here. Looking at logarithmic scale and deleting this stuff. The Gaussian channel, this is probably not the best chart to look at. 1 second, let's go back to the index, and we just won't save it because we need a longer term kind of thing. Okay, so the Gaussian channel is interesting. We've dropped below the center line of the Gaussian channel, as you would be able to see here. We've seen a red candle below the center line of the Gaussian channel. Now, this has only happened 2 times in history, and both of those times were bear market lows on Bitcoin. We can see that in 2014, after the bull market, we dropped below the center line of the Gaussian channel, right? We came back up, retested it, and ended up at a bear market bottom within about 3 or 4 months of dropping below it. Okay, so we dropped below it at around $460. Within about 3 or 4 months, we were at $160. Okay, same thing in 2018. We dropped below it at around $6,000, $7,000. 3 months later, or 4 months later on this occasion, we were at $3,000. Right, we've dropped below it now at around $39,000. All right, and say, for example, let's say it happens in March. That's 2 months later or 2.5 months later, we would be at the $20,000 region. Okay, and if it happens in, say, it's going to happen in March either way, late March, same thing. So regardless, we've dropped below that center line of the Gaussian channel, which on the weekly chart is very, very bearish. Okay, and we're looking at another thing called the Ichimoku cloud, which I've already looked at before, and we can see that on the Ichimoku cloud on the weekly chart is very, very important. And we've actually dropped below the cloud itself, closed below it, and now we're kind of testing it for resistance right now, which is, again, very bearish. The Ichimoku cloud is one thing that a lot of the bulls have used this year, including myself, since July, as kind of a reason for a bounce, especially in September. We can see that we were holding that support in September, and especially on this shoulder here we formed in late December, right? We were holding it for support there still. And that was kind of a reason for a dead cat bounce that a lot of people were calling for, or an actual bounce to all-time highs. So there's 2 things that aren't looking too great for the weekly chart. And with that, we can sum up the Bitcoin kind of analysis with the weekly chart. Again, using the 200-week SMA and using the 50-week SMA. We can see that the 50-week SMA is currently at 48K. Okay, I want to make something very clear. When we are below the 50-week SMA, historically, when we get below the 50-week SMA, the next logical target for Bitcoin is always, and always has been, the 200-week SMA. So if you guys don't know what these are, when we get below the red line on Bitcoin, historically, right? When we get below the red line on Bitcoin historically, the next target has always been and never failed to be the green line. We've dropped below the red line, we dropped below it at around 49K, okay? And the target from that is the green line. Now, until we get back above the red line and invalidate that scenario, I won't be bullish on Bitcoin. Okay, and the reason why I'm bullish at 48K is because, well, this red line is at 48K. And for us to flip 48K, we'll flip that line, and we'll also flip a bunch of other things in the daily chart. So very critical lines, the 50-week SMA and the 200-week SMA. I would expect Bitcoin to bottom out on the 200-week SMA. If it does not, I would not say this was a conventional bear market, because in conventional bear markets in cryptocurrency, we always see this happen. This is not just a Bitcoin thing. You can go on many, many altcoin charts, and even Ethereum, I'm pretty sure, and you can see this play out endlessly. So that is the Bitcoin analysis. For those of you who caught this on YouTube, thanks for watching, and on the live stream, I'll jump into